My dear students, what is tax? Tax is levied by government for the development of the state's economy. The revenue of the government depends upon the direct and indirect taxes. Direct taxes are levied on income of the persons, and the indirect taxes are levied on the goods and services by which the government mobilizes its financial resources. Role of government in developmental policies. Defense. This is an essential security function to protect our nation from our enemies. The Union government is responsible for creating and maintaining defense forces. Foreign policy. In today's world, we need to maintain friendly relationship with all the other countries in the world. We should also maintain cordial economic relationship through exports and imports, sending and receiving investments and labor. This service is also provided by the Union government. Conducting periodical elections. India is a democratic country. We elect our representative to parliament and state assemblies. Similarly, the state governments conduct elections to local bodies within the state. Law and order. Both the union and the state government enact numerous laws to protect our rights, properties, and to regulate our economy and society. To settle disputes, the union government has a vibrant judicial system. State governments take the responsibility for administering the police force in respect to states. Public administration and provision of public goods. The government generally administers the economy and society through various departments, for example, Revenue Department, schools, hospitals, rural development and urban development. The local governments provide public goods like local roads, drainage, drinking water, and waste collection and disposal. Redistribution of income and poverty alleviation. Governments collect various taxes to finance the various activities mentioned earlier. The taxes are collected in a way that the high income people can bring in more tax revenue to the government than the poor. The governments also spend money such that the poor can give some basic necessities of life like food, shelter, clothing, education, health care, and monthly income to the very poor persons, thus collecting taxes and spending for the poor to reduce poverty. Regulate the economy. The Union government, through the Reserve Bank of India, controls money supply and controls the interest rate, inflation, and foreign exchange rate. The main objective is to remove too much of fluctuation in these rates. The Union government also controls the economy through various other agencies such as Security Exchange Board of India and Competition Commission of India. All the governments in India run public sector enterprises to provide important goods and services at affordable rates to the people. Next important topic is tax. What is tax? The origin of word tax is from taxation, which means an estimate. Taxation is a means by which governments finance their expenditure by imposing charges on citizens and corporate entities. The main purpose of taxation is to accumulate funds for the functioning of the government machinery. Tax has come into forefront on account of the new concept of welfare state. Taxes are compulsory payments to government without expectation of direct return or benefit to the taxpayer. Professor Seligman also defined a tax as a compulsory contribution from a person to the government to defray the expenses incurred in the common interest of all without reference to special benefits conferred. Taxes are classified into two types. One is direct tax and indirect tax. First we will see direct taxes. A tax imposed on an individual or organization which is paid directly is a direct tax. The burden of a direct tax cannot be shifted to others. Income tax. Income tax is the most common and most important tax levied on an individual in India. It is charged directly based on the income of a person. The rate at which it is charged varies depending on the level of income. Corporate tax. This tax is levied on companies that exist as separate entities from their shareholders. It is charged on the royalties, interest gains from sale of capital assets located in India, and fees for the technical services and dividends. Wealth tax. Wealth tax is charged on the benefits derived from property ownership. The same property will be taxed every year on its current market value. The tax is levied on the individuals and companies alike. Next, we will move on to indirect taxes. If the burden of the tax can be shifted to others, it is an indirect tax. The impact is on one person while the incident is on the another person. Therefore, in the case of indirect taxes, the taxpayer is not the tax bearer. Stamp duty. Stamp duty is a tax that is paid on official documents like marriage registration or documents related to a property and in some contractual agreements. Entertainment tax. Entertainment tax is a duty that is charged by the government on any source of entertainment provided. This tax can be charged on movie tickets, tickets to amusement parks, exhibitions, and even sports events. Excise duty. An excise tax is any duty on manufactured goods levied at a moment of manufacture rather than at sale. Excise is typically imposed in addition to an indirect tax such as sales tax. See in this picture, the direct taxes and indirect taxes are given. What are direct taxes? Income tax, capital gains tax, security transaction tax, prerequisite tax, corporation tax. Indirect taxes are sales tax, service tax, customs duty and octroi, excise duty, and value added tax. Goods and Services Tax, GST. What is GST? The Goods and Service Tax is one of the indirect taxes. The GST was passed in Parliament on 29th March 2017. The Act came into effect on 1st July 2017. The motto is One Nation, One Market and One Tax. Black money. Black money is funds earned on the black market on which income and other taxes have not been paid. The unaccounted money that is concealed from the tax administrator is called black money. What are the causes of black money? Shortage of goods, licensing proceedings, contribution of the industrial sector, smuggling, tax structure. What is tax evasion? Tax evasion is the illegal evasion of taxes by individuals, corporations, and trusts. Tax evasion activities include underreporting income, inflating deductions or expenses, hiding money, hiding interest in offshore accounts. Next topic, taxes and development. First one, resource mobilization. Taxation enables the government to mobilize a substantial amount of revenue. The tax revenue is generated by imposing direct taxes such as personal income tax and corporate tax, and indirect taxes such as customs duty, excise duty, etc. Reduction inequalities of income. Taxation follows the principle of equity. The direct taxes are progressive in nature. Also, certain indirect taxes such as taxes on luxury goods is also progressive in nature. Social welfare. Taxation generates social welfare. Social welfare is generated due to higher taxes on certain undesirable products like alcoholic products. Foreign exchange. Taxation encourages exports and restricts imports. Generally, developing countries and even the developed countries do not impose taxes on export items. Regional development. Taxation plays an important role in regional development. Tax incentives such as tax holidays for setting up industries in backward regions, which induces business firms to set up industries in such regions. Control of inflation. Taxes can be used as an instrument for controlling inflation. Through taxation, the government can control inflation by reducing the tax on the commodities.